Good evening, everyone, and welcome to Forex Street and Animal Market joint webinar today. How to spot momentum in Forex market. So today we are going to talk about momentum, and I will show you tips and tricks how to actually spot momentum and use it to your advantage. So before we begin, as always, our standard risk disclaimer. Explain that online education materials are available by bear markets Estonia for a global audience. So take into consideration that information in this session is not suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, you should visit ironmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And don't forget that you can download Iron Market Supreme Edition by logging into your trader's room. Also, you can experience the benefits of WebTrader at this address. And don't forget that you are trading with the officially best MT4 broker in UK, that is Iron Markets, for 2015. Okay, so this webinar is for informational and educational purposes, and Iron Markets UK Ltd takes no responsibility for the information accuracy. This is not a signal, and remember that Forex is risky business, so this is taken as advice. What is momentum? Which conditions are suitable for momentum measuring? Then we will take a look at RSI and MACD and the actual momentum on. There is an interesting way how to also spot the momentum besides RSI and MACD, and I will show you that at the last stage of today's webinar. So what is a momentum? Momentum is a measure of price velocity. So you need to differentiate always between momentum and trend. Trend is both zigzag and momentum. So if you see a bullish zigzag, that means higher highs and higher lows, that trend will have a momentum. But if the trend suddenly goes in retracement mode, that will actually be so-called loss of momentum. But the trend will still be there. So don't be confused. Momentum exists even if trend is getting weaker. So we call it a loss of momentum because we expect that at a later stage during the same trend, price gets fueled with additional momentum that will possibly make another higher high in uptrend or a lower low in downtrend. Price frequently lies, but momentum speaks the truth. Maybe, I'm not sure how many of you follow me on Twitter, but something like 30 minutes ago or 45 minutes ago, I did the actual live trade for ODN today. That was in correlation to my pound OD analysis. And basically that was a momentum trade because some people might be fooled that the price will go down on, let's say, today's ODN because the price was dropping, breaking the lows, but actually 4-hour chart still shows bullish trend. And that happened. I bought it on dip, made 33 pips of profit. So that is what you can do also. You need to align the momentum and the trend. Because of that, you need to do multiple time frame analysis. And I personally know that many professional traders rather trade momentum than price. But also many traders trade price along with momentum. So momentum gives us the force behind the move and pushes the price into desired direction. Okay, so that is important for you to know. Some additional definitions of momentum say that it can be described as the level of market sentiment behind any given market move. It's the ongoing battle between bulls and bears. And those indicators that we use for spotting the momentum will help traders to establish whether the market may be likely to respond to these levels. So momentum measures the speed of price change. The faster the price changes, the larger the momentum. So we can use momentum indicators for following matters: overbought, oversold conditions, chart pattern momentum breakouts, trend following and retracement, and divergence. Actually, momentum breakouts will be covered in premium section of Forex Street webinar. I have already scheduled it. I think it's 12th of the April. So I will teach you how to trade, actually, how to make trades with chart pattern momentum breakouts. And today we will focus on finding and spotting the retracement within a trend. Because if you know how to do it, the chances are you will be getting earlier in the trade and you will exit later. And that is good, because smart money is buying low, selling high. Remember, guys, you don't want to trade like retail traders, like 95% of retail traders. You want to trade as big banks do, as institutional traders do. So how they do it, at least I know, because I was a trader of UK. I was a head trader of UK firm back in 2010 and 11. So it's always buying low, selling high, unless you opt for some momentum breakouts where you actually scalp the markets. But as you can see from my analysis, I prefer to buy low, sell high. So I prefer to go with the trend. You need to be patient. You need to wait for the price to come to you, else you will be chasing the price, and that you want to avoid, because chasing the price is always like chasing your shadow. You cannot reach it. So you need to stand still, you need to be patient, and you need to wait for a retracement. When you wait for retracement, you're waiting for the market to come to you. You embrace it and you ride the trend along with banks, hedge funds, institutional funds, commercial banks, companies, all those things that move the market. So, for example, RSI indicator, it definitely identifies momentum, because when there is momentum loss, it tells you not to take any breakout trades or exit the positions. Usually, some traders think that RSI is lagging indicator. Well, let me tell you that RSI is nothing more than a leading indicator. RSI leads the price and price leads the RSI. They lead each other. How price moves, RSI will copy it. So RSI is a leading indicator. Okay? It is also a momentum indicator. Usually we say that lagging indicators capture the momentum better, such as MACD. MACD is lagging indicator. But don't forget that using overbought and oversold conditions, which MACD 2-line does not have it in its traditional sense, you're actually identifying breakouts. So we will do that, of course, on price, on our premium webinar on 12th of April. But at this time, it's enough to say that RSI can be used for spotting the momentum and for not taking any false momentum breakouts. So it safeguards us from taking bad trades. So it identifies a momentum loss. We don't take any breakout trades, or we exit, for example, long or short positions. So this is it, guys. For example, you can see this is the resistance, this is support, and usually now if you plot it on your own chart, you will see that RSI is following the price. If it's close to 70, we might say that the price is overbought. If it's close to 30, we might say that the price is oversold. But actually, trading the RSI breakout on their trend lines is the technique that I will teach you on exclusive freemium webinar that will be held with Forex Street on 12th of April. We will deal with MACD today because that is my favorite indicator, and I really use it very occasionally to identify momentum loss, so-called retracement, and of course to identify possible divergence. MACD is frequently used to identify both momentum and retracement. Don't forget that retracement is a loss of momentum within the trend. There is no retracement without a trend, guys. There is only reversal. So the pattern is trend, retracement, reversal, new trend, retracement, reversal, new trend, retracement, reversal. Okay, remember that. Retracement is the best thing we Forex traders can possibly have it. I also know a lot about equities, and I do the analysis, fundamental. I am into it a lot, but I don't trade it. Equities are a group of indices, such as that we cannot find and spot historical support and resistance levels. Contrary to Forex market, that one of the most fundamental things you should use is comparing historical versus now moment buyers and sellers. And the great advantage in Forex trading versus equity trading is the case that you can find easily, identify easily support and resistance. Most equity trades are done as breakout trades. And the best success I witnessed on 1 minute charts, because equities are much faster than Forex market. And sometimes 50 pip move in Forex market equals to 150 on DAX. So the point is, it's safer to use retracement. It's safer because you will be going with smart money. You will be going with a trend, with institutions that shape up those trends. One of the most useful indicators for spotting divergence is MACD. And in my opinion, MACD is, at least how I use it, is the top indicator for measuring the momentum by using top-down or MTF analysis. Okay? We use top-down analysis on MACD to actually measure momentum, guys. Okay? We use MACD two-line, but we need also to have OSMA or OSMA. So this is dollar yen, for example, and you can see MACD two-line indicator. So MACD 2 line will identify both the trend here, you see, it's above zero line, and retracement. It's still uptrend here, but here you see. Remember, guys, this is 1 hour chart. So if you zoom into 5 minutes or even on 1 minute, you would still find good trades. So you never ever use top-down analysis without zooming in to a lower time frame. And actually, I will show you that also on live chart. The rules are, when blue MACD crosses above zero line, we call it a bullish momentum. When blue MACD crosses below zero line, it is bearish momentum. Okay, so pay attention. Also, when blue and red above zero line, we have both trend and momentum. When blue and red are below zero line, we both have both bearish trend and momentum. And this is retracement in uptrend. Okay? Blue crosses red while still above zero line. Blue crosses red while still below zero line. So, this is the schematics. Trend retracement, top-down analysis sequence for intraday trading. 1 hour, we zoom to 15 minutes. 4 hour, we zoom to 1 hour. Eventually, we can roll up to 4 time frames until we spot a retracement. 4 hour, 1 hour, 15 minutes, 5 minutes, even 1 minute. Or 1 hour, 50 minutes, 5 minutes, and 1 minute. I particularly don't use 30 minutes because 30 minutes is profit-taking time frame. What I have noticed is that if you watch 30-minute time frame, you will usually see some form of a profit-taking. Now this is, you see here, this is actually GBPOD. And if you read my analysis on GBPOD today, you would know that actually GBPOD made almost 100 pips from the analysis. I will use this example because it's the current analysis, and this is the analysis I did before actually price went up. So the price was here at the time I published the analysis, and you can see it where it went afterwards. So let's use that example. Okay, so you need to have MACD indicator with 2 lines. I'm not sure that you have it. I can give you for free, guys. The indicators, I have the indicator. So it's custom indicator. I called it MACD cam indicator. And it helps me. I am not the original coder because I'm not a programmer, but I have the code, and actually this is excellent indicator in my opinion, and it's free. So if you want to have it, you just need to send me an email, and of course I will give it for free as always. So the little trick that you should do is actually here in the indicator itself, you see there is 2 important points: show histograms or show OSMA. Okay, what you want to do is actually to click on false and click on true. Maybe you have also your own indicator. I don't know, this is what I use. Maybe you have something similar. Here you will see it like this now if you click it. So see, and you can also make zero line bit more visible. When you go to levels, you said add, you put here, you put black, sorry, here, And actually now we have the line of 0. Okay, now what you usually do is actually, now probably Yellen is speaking, I guess, so we will have a bit of momentum now, because you see when Yellen is speaking, the price will really behave erratically, so you need to be very, very careful. Okay, so here it is. Let's see 1 hour example. At a time of analysis, let's say the price was here. See here, at this time, MACD was just crossing this 0 line. We can also move to 4 hour to see where the price was. So here it is. At this time, just be focused on MACD now. We are focused on MACD, guys. Here, you can see that the price was above 0 line. So pound Dottie, at this time, while I was making the analysis, it was bullish. See? It's above. Both blue and red are above 0 line. So there is both momentum and trend. Now, if you go to 1 hour time frame, you can actually see that momentum here has been lost. Okay, but at the crossing here, we have another momentum push. So what you want to see is retracement. So 4 hour time frame shows both trend and momentum. 1 hour time frame here at this time, it showed a retracement. Why? Because at this time here, the price was still above 0 line, but you see, blue was above red. You see, blue was above red while still above 0 line. And that gives us the cue that possible entry can be found on 1 hour time frame. And then I made the prediction, the analysis, saying that if the price breaks with strong momentum 1 hour time frame, it will reach this level. Well, it almost reached this level. This was yet another proof how trend trading is always the best, at least to traders who trade the similar way as I do. Now we can also let's see, for example, euro dollar. Well, guys, I'm not sure that you are still familiar with the analysis I did also on Forex Street on Friday, and I showed it on Monday session recap with Admiral Markets. This is the analysis that I made with Forex Street. Well, I said this pair should be bullish if it rejects from these levels here. And actually, what I did is I made in Forex Street poll here, the prediction was pretty much clear that, in my opinion, euro dollar was bullish. And I will show you again why, one of things I do. So here you can see currencies poll. This is where euro dollar should go. And this was based on Monday. Okay, so this was based on Monday. Okay, so on Monday, the price was a bit lower. Okay, here you can see it now. Okay, it almost broke H5, so it's very, very, very clear that the price is bullish. And you can easily see that, guys, on 4 hour time frame. Just watch MACD. Now don't forget about the price. Watch MACD, guys. Okay, what do you see here? Is actually you see MACD is above 0 line. Here you see both blue and red were below, but you see histograms. Remember, guys, on 4 hour, histograms are very important because we are using OSMA. We don't use classic MACD histograms. So these histograms, OSMA, that are different compared to traditional MACD, they say this is bullish. See, above zero line. And actually, this was a cross. So on 4 hour, the price turned bullish here. This was bearish price action here. But here it was bullish. Now, if you drop down to 1 hour chart, you see a retracement. This is retracement. Look, still above zero line. The trend was to the upside here. The trend was to the upside. Okay, I use EMA. I use EMA 89. You can use confluence always. So here we have a huge confluence. Bullish price action, zigzag, a cascade, rejection of EMA T89 pattern that I was also showing you on premium webinars, T89. And look at this, price went crazy now. Okay, very easy to spot. You see where how the histograms. So on 4 hour, you don't need to watch these lines. On 4 hour time frame, it's usually enough to watch these histograms. On 4 hour time frame. Okay, so this is more than enough. But on 1 hour time frame and lower, you need to watch the lines also. So here you can see both blue and red were above zero line, but blue was above red. And here you see the histogram. So this was retracement. Below zero line retracement. So what you do is actually you can spot the entry on 1 hour time frame, because 4 hour is bullish, 1 hour is having retracement. So guys, I think this is a great method to actually spot your time frame of entry. So if I see that 4 hour is bullish and 1 hour is losing momentum, but it's still within the trend context, use your confluence. You can use trend lines. You can use Fibonacci retracements. Okay, so look at this. Perfect rejections of 78.6 and trend line confluence, guys. And actually, on yesterday session recap, I made a setup on euro dollar saying that it could go to 1.1150 and then proceed to the upside. And actually it went to 1.1169, 4 points off my POC zone. And look at this, where it goes. So really, I'm not sure how many of you are profitable in Forex, but what I can assure you, you can be profitable. And by using different techniques, you should enjoy being a Forex trader. This should become both your passion and your life. There are so many tools that can be useful to you when trading Forex market. And MACD retracement and spotting the retracement within the trend context is one of my favorite concepts. Of course, I've not made it up. The book from William Blow, Momentum, Direction, Divergence. I took principles from his book and I adopted it to my own style of trading. So that is exactly what Mr. William Blow was implying on his study on MACD, that it's used for both momentum, direction, and divergence. And you just need to watch a loss of momentum on or so-called retracement, and it's more or less easy job picking up the entry point. Let's find bearish pair. Dollar CAD should be bearish, yes, because it's in opposite correlation to euro dollar. So 4 hour, oh, very, very bearish. So 4 hour, we watch only histograms or OSMA histograms. OSMA, sorry. So this is what we watch. So bearish. 1 hour here. Well, look at this. Even on 4 hour, it's below EMA 89. So there is also a so-called, this is not M pattern, but it's bearish pattern in its nature, because this low has been broken here. So very, very clear that this is a bearish price action. But on 1 hour, we should, you see, we should have seen bullish price action, and this was bullish price action. So here we had a loss of momentum because the price went up. But both blue and red were below zero line, and here red was above blue. So this was retracement in downtrend. Downtrend, and here you can see a retracement. So both lines are below zero line. Red is above blue, so here we can see that there is actually retracement. So what you can do, you could do or whatever, place a trend line, pivot points, shooting star rejection of a trend line and pivot point. Clear signal for a short entry. Why would you use EMA crosses, stochastics, crosses, whatever, if you can use price action? Now, I'm not talking against stochastic, whatever, because stochastic can be very, very useful in some strategies. It can be extremely useful. But if you want to trade price action, this is more than enough. Don't forget, price action trading is not naked trading. Some people mistake price action trading for naked trading. Naked trading is one thing, price action trading is something similar because it can use few indicators, few simple indicators such as MACD or EMA. Naked trading is trading without any indicators. I don't do that. I need indicators to tell me, to give me cues for some things. So this is still price action trading. Trend lines, rejections, patterns, sharp patterns, identifying historical sellers versus now moment. For example, here, see historical selling off of this zone here. Look, there were sellers here at this time because see, and here, of course, sellers in now moment. Price action, look, always repeats itself. That is why I say that historical versus now moment perspective is always the best. We can do one more example, and you can ask me questions if anything is not clear, guys. Please do ask me, because I want you to understand this concept. Pound, let's do one more bearish setup. So if 40 yen is bullish, Australian dollar should be bearish at least for a while. At least for a while here, at least, yes. So because they're moving in, let me see the correlation matrix. What does it say? Oh, the yen, Australian dollar. Okay, now they're positively correlated on daily chart, but on 1 hour chart, last 200 bars, I want to see for intraday, well, slight correlation, not so good correlation. So this is nothing, plus 15. So let's see Australian dollar. Okay, dollar yen. So dollar yen should be bearish. Okay, yes. See, correlation matrix, the feature of Iron Market Supreme Edition. Okay, 4 hour time frame. Look, it's a sell here. So this is bearish. 1 hour time frame. See, the price is going. Now what we want to see, let's see 15 minutes. Look, now possibly there will be entry on 15 minutes. Because look, 1 hour is, or it, okay, here, interesting situation. Blue line is above while red is actually below. So in this case, what I would do is because this is very close to actually being very bearish on 1 hour chart. Although blue is still here, you see red has broken through zero line. I would go to 15 minutes. And here I would try to spot an entry. What I would do is wait for a retracement candle. We don't have any retracement now. we need to wait for start of retracement, then put Fibonacci and see if 15-minute time frame will be still below zero line. So MACD on 15 minutes should be showing below zero line, both blue and red, but like this, something like this. Red should be above blue. And when that happens, we know that retracement has started, and we can try to search for entries on 15-minute time frame using 4-hour trend. So in this case, you are actually aligning the trend and loss of momentum, so-called retracement, because you want to sell high. You don't want to sell low. I would never sell it here. So I would wait for 15-minute time frame to show me retracement, and then I would go for a sell trade, because obviously 1 hour is also bearish. See here. So there is no point in waiting for 1 hour to go for these lines to go below zero line, because already this red line has crossed zero line from upside. So 15-minute is a time frame of choice. And I would go with, of course, Fibonacci, trend line, EMA, confluence points, because I'm a big fan of confluence, POCs, and so on. Okay, so that is how we use MACD. Okay, that is how we use MACD, guys. Okay, these are different examples. So use it in conjunction with FIBs, pivot points, trend lines, or confluence points. And I recommend you to read William Blaw's Momentum Direction Divergence, a great book. And actually, you can find some of these concepts there. Now, additional tip, guys, for all of you who prefer to trade with different systems and indicators, this is how you can also do it. So you have momentum indicator and foreign SMA applied to a momentum indicator. So if we identify the uptrend, we will use momentum SMA break to enter long trades after retracement. So when momentum line crosses SMA on the same chart, on the same window, you can actually hope for a breakout. This is just a quick tip, and this is how you do it. First, you need to go to insert indicators, and you go to oscillators, and go to momentum. Here, you put 9, like this. Now, you go to indicators, and trend, moving averages, like this, and place it here. 14, SMA, color it red. You can do it like this, for example. Or it's much better to be thin. And here, let's see, silver visualization on all time frames, and apply to previous indicators data, like this. Okay, so now you can try to trade breakouts, and this also works for lower time frames. For example, if you see a trend line like this, let's see if there is a trend line. Yes, there is. Look at this. Momentum broke foreign SMA here, and this was actually a breakout here. You see? That is how you can do it also. So guys, I hope that you enjoyed this webinar. I showed you some tips and tricks of MACD, SMA, momentum indicators. And if you have any questions, you can ask me. If not, we can assume that basically everything is clear. So yeah, I don't see any questions. So I assume that everything is clear and that you actually understand this as you should. Okay, so thank you for listening. Thank you for being here with me. I advise you to follow my analysis on both Algorithmic markets and Forex Street. And if you want to grab this smooth MACD indicator, just send me an email and it is for you. My email is tarantulafx@gmail.com. Okay, so it's free, so just send me a request. Thank you for listening. Thank you for being here with me, and see you soon. Cheers, and as always, trade safe.